p.m. Why don't we go ahead and start with the Pledge of Allegiance? I believe we start every meeting with that. No. I pledge allegiance to the flag of the United States of America,
to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you all. Do we take attendance here? Do we ask for everybody to identify themselves?
Paul Bauer, liaison for the committee.
Zeke Brogowski, member.
Bill Zolper, town manager.
Dominic Restapino, member.
John Gephardt, member.
Gary, do you want?
Gary Persinger, commissioner.
Thank you all. For the agenda that we had, the February 12th minute meetings, this is on me. I have not been able to type them up and have them distributed yet. I will get that done, as well as the minutes for today's meeting, send those off to Kate so they can be posted and then available for approval at our next meeting. First agenda item is the review of the actual April through September results and projections from October through March 24. Sheena, are you going to do this, or Bill, who would you like to present this for us?
So yeah, Dan, so what we'll do is, if it's okay with you, we'll have Sheena come up to the mic. We'll have Kate pull the actual sheets up, the talking sheets up, the revenue and expenses performances from April. It says from April through August, but really it's April through September that's actually on the sheet. And then if it's okay, unless you want to start off with some questions, I could have Sheena explain how she came up with these numbers, if that's okay, Dan.
I'm good. So we can go ahead right to Sheena presenting the numbers.
Okay, basically it's the actuals. That's all that's, your numbers through the month of September.
Which document is this? What document is this?
Revenue and expense performance.
It'll say at the top, it'll say
Revenue and
revenue expense.
Performance.
Right.
It's a 4-page big document.
As Bill mentioned, I think the only issue is on the header here that says August, and it's actually actual through September.
Yes.
Yeah.
Yep.
Year to date, before set-asides, we're at 668,000 to the good. Set-asides take us, drop another 308,000 out of that. But we only have one major revenue stream left. And that's accommodations tax, which is coming in this month. Hotel tax still is coming in, but it's going to drop off drastically. So, so far we're good. We're above ahead of where we projected. But it just depends on, that last revenue stream.
So does everybody understand how this sheet, I know it's hard to read how it works. Sheena goes through and she says, this is what we projected in the budget, and these are the actuals that have actually come in. So for example, let's talk about parking. So parking, we budgeted 1.4 million approximately, and we came in above that. We're at
1.12.
Yeah. So those are actually in, and we beat what we met and exceeded what we thought we would in parking. Okay. So Sheena can talk about certain areas as of right now where we've met or exceeded in our budget, and she can also talk about where she thinks we haven't, and then given the next from now until March, where we will not or where we will make up for it, and why she thinks that. If you wanted to go through that.
Yeah.
Okay. That gets into the projections.
So if I go back to this revenue and expense performance page. So what was the number, 680?
It's 668, 668,000 were to the good before the set-asides.
Okay. 668,000 over where we expected the budget to be.
668,000 money coming in over money going out. Forget about the budget, just
Okay.
what came in versus what went out.
Okay.
Gina, are you able to position the document, or are we on this side supposed to get there? It's a pretty big document for a like a 13-inch screen. So are you? I see a cursor every once in a while. Are you heading to where your discussion is, or what?
No, Kate's actually controlling that based on what Sheena says and what I've asked her to put up on the screen. If
Okay.
there's something in particular you want brought up, just let us know and we'll try to see if we can increase the size for you.
Okay, great.
I think
I'm
this-
just
I think
I'm
this-
just trying to be on the same net, the same. Yeah.
So would you like to see the page where Sheena explains where we've met and where she thinks we're not going to meet some of our?
Exactly. I would. That'd be great.
So that's this one. If you could bring that up.
It's the Word document. Explanation, budget projection explanation, that's one.
Okay.
Go ahead and walk us through that, Sheena, please.
All right, transfer tax is kind of wonky because we had the Hyatt, which no more selling there, of the originals. And we had COVID, which when everybody was home doing nothing, they started buying property. So what I've done is went back to the actuals from FY14 to FY18, which was before the Hyatt, before COVID, when we were all happy. And I took what the percentages were for the last couple months in those years, the average of those 5 years. I know what we're getting in October because I know how much the one piece of property that transferred in September, what we're getting from that. We get that in within the next day or two. And based on the percentages from the pre-COVID, pre-Hyatt years, I think we're going to go right about 530,000. If we hit because more property transfers when people were bored in the winter.
So Sheena, was that sort of in November at 35,000 as an estimate would imply that you have, say, 2 properties changing hands? Approximately?
It could be one property, one nice sized property.
Yeah, okay.
It's, I just know I just know there was one piece of property in October that transferred. So that's where I'm looking there. Hotel tax,
So do you see the budget? We budgeted 500,000 there, but Sheena thinks we're going to come in at about 529. Do you see
Yes.
that? Okay, I'm sorry, Sheena.
that's all right. Hotel tax, I've been tracking it by hotel since it's come in, so I can keep track of who's open in the winter, who's not, things like that. And based on this year, from April through September, versus last year, April through September, there's 3% less revenue is being reported by the hotels. So if they reported 100,000 last year, they're only reporting 97,000 this year. Now, it's not every hotel.
Mhm.
Some are reporting a 10% increase. Some are reporting about 5% decrease.
Overall, according to Chamber of Commerce stuff, everything's down this year.
Right.
Like about 10% overall.
Right. I know the hotel right across from the town hall last year did not have, it was no vacancy every day. This year, it's been vacancy every day.
And the
So,
variables here, Sheena, are the rates that they charge, right? So it could be a combination of room rates as well as occupancy.
I just know what they are reporting to us
Right,
is 3% less than it was last year.
right, okay.
And our percentage only went up 0.5%.
Went from 2% to 2.5.
Right.
And
So-
then this April, it went up to 3.
I do think room rates have come down a little bit, which could be, if you lowered your price of room rates 10%, you're going to be off 10% on your 3% of the tax,
Yeah.
right? So
Yeah.
So that makes sense.
I'm looking at, we're gonna miss budget on hotel by about 13 to 14,000.
Does that also include the Airbnbs and?
No,
Okay. straight
that,
hotels.
that falls under accommodations tax. And that's all coming in now in October. And I looked at that before coming over here. A lot is coming in, but it's not where I would like to see it.
So do you want to go over the rest of the revenue, the projections and the reasonings?
Yeah, the
Where are
rest
we at with accommodation? I don't see that on here.
of accommodations tax,
Yeah.
I didn't put it on here because it comes in August, October. So what we've gotten in this year, or Commissioner Persinger has noted that we have gotten some in every month. What has been happening is when, say Commissioner Bauer, you rent your property. You turn in you get your rental license in June, and the front office goes, hey, you didn't pay your accommodations tax last year. So that's last year's accommodations tax that's coming in this year.
Okay.
They're catching it now.
So what's the proper way to account for that? Is that revenue that came in this year though? So
It came in this year because this is when they paid it. With it being a complete honor system,
Right.
we have no way to project.
Did we buy that software? I thought we had the software that would help
Yeah.
us.
It does, it tells us who is renting, but we can, unless we go out there and physically knock on doors and say, pay up, which that's not an option in my opinion, we can't make them pay.
got it.
In some cases, the owners have the realtors take that 3% from the renters, and the realtors actually paying that tax. That's the case, at least with our house. But I guess what you're saying is it's not happening in a timely fashion, even with the realtors?
No. This is, Commissioner Bowers renting his place. Something happens where he's ready to write the check in October, something comes up, he gets distracted, it doesn't get paid, so he goes to do his, and it slips his
Year-end
mind.
taxes, right.
Life happens, and I do not think that any of these people are purposely withholding pay. I think it's just,
Yeah. Kate, Sheena, you may know as well. Do we have the same number of rentals this year as we did last year?
I have not looked at that number. I know the amount of rental licenses did not make budget.
The amount of rental licenses, okay.
And I see that on my street, certain causes that did rent, didn't now. They're back from Silver Spring, DC, and they decide they want to live there rather than rent it. So I've seen.
There's more people living there, there's no doubt about it, so. But that's an interesting number, because I don't think prices have gone down on rentals. So if you have the same number of rentals and prices didn't change.
Right, so
You should get the
we'll
same
see
amount of
after
revenue.
this month as to how much accommodations tax comes in.
Yeah.
Because a lot is coming in daily.
Yep, Dan, we should probably make that a review item for next budget meeting.
Yep. Got it.
Now,
If I remember, it was 620, 630, what we used to have.
Yeah, Laura is handling rentals now, so I'm not directly hands-on
Okay.
it every day. I believe it was down slightly from last year, if I remember correctly, but as with my history of handling the accommodations tax and anyone who is renting over the summer who we were kind of just catching, all of that happens in the fall.
Yep.
So catching anyone who was running over the summer without a license, that's happening now. Accommodations tax from the summer was only due October 15th.
Okay.
We get a lot of
2 days
people who
ago, right?
turn in late. We have to do a lot of mailers and email blasts for all the people who we haven't received accommodations tax yet. So to try and count it a couple days after it was due, there's no way it would be anywhere near accurate at this point.
Yeah, and we have the software model that tells us who rented, who didn't, but not the collection aspect of that software, if I recall.
Correct.
And that might be something we want to look at that would, because it sounds like we're chasing a lot of that money between now and the end of the year.
It worked. We
It
did
did.
end up finding folks that just said, oh, I forgot, or I didn't know I have to have a rental license, and I didn't know. So we put them on notice, and then all of a sudden they started coming in with it. But as Sheena said, people just, for some reason, forget sometimes and just don't make the payments, and then
Not in a
they,
hurry to write us a check.
yeah.
I get it.
The second page of that shows the revenue streams that have made budget. Now, they're small. Now, licensing is business licensing, commercial business licensing, and your rental licensing. They netted to make budget. Now, we're still getting money in on those. Because Zeke wants to have some work done in his house, he's gonna pay, there's gonna be he hires somebody that doesn't have a business license. That's a business license that's gonna come in. You know, it's gonna come in the rest of the year.
Mhm.
So that's all icing on the cake. Parking, we get the last of the Park Mobile for September. We got it yesterday. That was about 82,000. So parking for the year is about 97,000 over budget between your hang tags, your Park Mobile, your coin meters, about 97,000 over budget. Most of that was your seasonal permits, because at 250 for an out-of-towner and your daily permit being 25, these kids that live in Lewis and come down here, they come down 11 times, they just buy a seasonal. They're and I know quite a few of those, the kids up there were doing that.
I've seen an uptick in seasonal permits and cars, you just notice it. Yeah.
So the building permit application, beach fire, dog licenses,
Hey, Sheena, I'm sorry to interrupt, but
Yes, sir.
to go back to parking for a minute, so the 1.5 million or 1.4 million, how much is the tags versus the meters? These are big numbers, and it's probably number one of our revenue. So is it mostly the seasonal and the tags?
the tags ended up being 55,000 over budget. The daily and Park Mobile ended up being 75,000 over budget, and your meters were under budget by 30,000.
But on the meters, we didn't put out as many meters this year. So Dickinson Street on the Bay side, we didn't put meters out this year. We just had everybody there do Park Mobile. The meters, there's maintenance on the meters. The coins have to be collected from the meters. And there's just a lot more labor intense for the meters. We do have some meters still spread around town in certain areas, but for the big areas there on Dickinson Street Bayside, we took the meters out.
And so, Bill, you keep some meters because people don't have Park Mobile. They need a way to pay. That's the logic of keeping the Park Mobile.
Correct. Yeah, they can do Park Mobile, or they can come to Town Hall.
Well, that's right. We have the machine up there. Okay, got it.
The building permit application fees, those are for the large permits, and I know there's been quite a few come in lately, as everybody's building now that season's over. So that'll go up a little bit. Beach fires is pretty much done. Dog licenses, we'll have a few struggling in, and public hearing fees, not really much of that. So those, even though we've made budget in those areas, I doubt we'll even have 10,000 coming in between licensing, application fees, beach fire, over what we've gotten so far.
Okay. Makes sense. But if we hit transfer tax and we hit hotel tax and we hit parking, it covers most of our budget.
Well, building permits, we should hit.
Right.
Accommodations tax, I won't know until after this month, have a good feel of it. Transfer tax, I think we will. As I said, I think hotel's gonna be under. But it's just now, it's a matter of, making sure that expenses stay where they should be.
Sounds good to me.
Are there any questions on the actual projections that Sheena's looking at for the individual items that go from now to the end of March?
March is 14% is an actual historical 14 to 18 fiscal year.
That is an average of those 5 years, the percentage average for that.
Gina, the only question I have, so this shows that with your projections, we'll be at 5.2 million compared to a budget of basically 5 million. But in here is a gain and loss of $125,000.
Okay,
Yeah,
yeah. So that is a paper gain and loss. And Commissioner Persinger has brought up, and I have to, I will let the commissioners, y'all recommend as commissioners, and the commissioners decide. However, I do agree with him that that should not be counted in our budget because it's on paper. It's not money we're getting in or we're paying out. Until we cash out of Brown Advisory or they hand us money, it's on paper, it doesn't count. But I have to go with what y'all decide on how to handle that.
got it. And then who controls that recommendation to you? Is that the commissioners? or is that-
It would be the commissioners that would make that recommendation on how they want to show Brown Advisory in the paper there,
Correct.
right?
Okay.
Right.
Commissioner Persinger, do you have any comment on that?
Yeah, that was my recommendation, as Sheena said quite accurately. Investment income, unrealized gain and loss, or realized gain and loss. These are all paper transactions. That's not money that ever contributes anything to our operating budget. So it really doesn't belong here. And if you take those three numbers out, you'll actually improve your income picture by about $10,000.
Or 40,000, I think it is, right?
Well, you've got 100 and
Your year-to-date,
you have $150,000 in investment income and unrealized gain and gain, but then you have the long-term realized loss of 125,000. So the net there should be about $10,000 to the good.
okay, I'm looking at 82,000 year-to-date for the unrealized.
You've
And
got
then,
investment-
Yes, that's it. It ends up being about 37 to 40,000 if you take those two out.
Yeah. Commissioner, I'm with you. I think that, like, I would always show that below the line. So this is sort of the cash accounting. And then that would be, down below for change in assets is how I've typically accounted for this.
Right.
Yeah, that probably should just get posted when we do our audit, whatever our fiscal year end
Right.
number is, whatever that month is, that's our,
Right, it would be.
we could
but-
show an up and down every month, but I mean, it is what's gonna
Right,
be.
it's good to keep track of it so that we can see if our investments are
Right.
productive, but I need y'all to make the recommendation, to make the decision on that.
Yeah, I think I'm agreeing with Gary here on it, just probably doesn't belong here, but something to keep an eye on.
Right.
I check my stocks all the time.
Good.
I just don't report them on some.
Are there any other questions on the actuals, the revenue, expenses, what we have up to today's date, and then what we're projecting out to the end of March,
Or how I'm projecting
or
it.
how she's projecting it?
I didn't have any particular questions, just in terms of you've identified some of the risks. So if I look at this and I take out that for roughly $40,000, you're projecting roughly 382 net compared to a budget of 455. Excess is what I'm doing.
Right, prior to the set-asides,
Right, right,
which are not really a cash.
right.
That's just, as I explained it to Bill, it's a pair of cargo pants. You're taking it from your left pocket, putting it in your right or your knee pocket. You're
Right.
just moving it around in your hands.
So even with your projections, we would be, $40,000. We'd be below budget by roughly 40,000, but still in the black, which is good.
Right.
I don't think that's the case. Based on these numbers, we'd actually be about $56,000 in the red. You've got 381,928 in net income before set-asides, but you have to subtract the set-asides. That's part of the operating budget. So you've got to take that 437 out as well, which would put you at about 56 to the red. And if you take out those investment income figures, you can improve that by about $10,000. So you would be about $46,000 in the red.
So the set-asides are actually this cash, let's just take the first one at 15,000, gets transferred over to that account that we have?
It's, the set asides are a non-cash activity because we are not making money, we are not spending money. We are moving it between accounts, and that is not an expense, it is not an income. It is just money moving around.
Transfer.
But it's part of our income. It's part of the income stream that's at the top of the spreadsheet. And if you look at our operating budget and we look at the net result that we approved originally, we were approving something that was about $28 or $9,000 to the good. So now that has changed to minus $56,000 in the red. It's money that we still have, but it's money that comes out of our operating budget, out of our operating revenue. It's money that we do not spend to support the operations of the town. We put it aside in other accounts. Some of it goes to the rainy day fund, some of it goes to infrastructure.
Unassigned.
To the capital improvement fund, which is now being directed to the new town hall. So it's still money that's doesn't count toward our operating budget.
Understood, but it's,
If we move it and use it as an expense, that if we reassign it and use it as an expense it out, then when we use it to pay a bill, we have to use it, recognize that revenue coming back in, and then expense it back out. So you're doing multiple transactions for the same thing. I understand Commissioner Persinger's way of looking at it. I have to look at it from the way the GFOA, the government finance, yeah.
Not for
Y'all
purposes
tell
of.
Y'all tell me how you want it seen, and I'll show it that way. But I'm telling you, based on government standards.
All right, let me try to understand. So capital, or streets and infrastructure, that's one of the set asides. So we rely on a couple of the pipes that cost us $100,000. I think that was one of it was 80-some thousand or whatever it was. So we took the money, we brought it in as revenue, we put it into wherever it came from. It came from transfer tax or whatever. We took a certain percentage out of there, we put it over here. We called it the streets and infrastructure account for $100,000, and now we pay it. So we can't count that 100,000 twice. We can only count it once. It only came in one time and it went out one time. But in between, it went to purgatory here and just said, we can only use this money. It's sort of like earmarking something, right? We're saying, I'm going to use this money for this purpose.
Correct. What Commissioner Persinger wanting to show is that when it goes to that set aside, it is an expense. Now, that money may sit there for 2, 3, 4 years.
Right.
And then when we go to use it, that's when it is expensed out. So we have to recognize that money coming back into the general fund, which it's not. It's
right. So I'm just using that example. So money came in, $100,000, and we put it set aside for streets and infrastructure. It came in one time and I paid it out one time, but I can't count 100,000 moving into streets and infrastructure and another 100,000 that went out. We'll always be 100% behind that way.
right. You only recognize the expense when you actually pay it, use the money.
So what's our auditor say? Are we accounting for it correctly? I guess that's above my pay grade. So.
The way that we are accounting for it, yes, but the way you're reporting it, the way it is being shown, it's not government accounting. But I have to, if that's the way y'all want to see it.
No, I want to follow whatever our laws are.
That's a good way to put it.
Yeah.
Not my choice. I mean, we're going to follow whatever the law says we do.
We are not trying to change. I'm not trying to change any of the accounting rules.
Yeah.
We're trying to treat this money in any way that's inappropriate for the GFOA. We're just trying to get a budget report here that makes some sense in terms of the way the town operates and the money that it uses to operate. This set aside money, it all comes in as income. It's all reported at the top of the spreadsheet. But it's money that you don't spend to support the operations of the town. You're not paying employees with it. You're not buying equipment with it. It goes to, it's set aside for other purposes. The new town hall, streets and
Right.
infrastructure. One other, a rainy day fund, and I'm probably forgetting something else. And so, we're not asking that this should be accounted for in any
Any
inappropriate
different way, right?
If you look at the audit report, what you'll see in there is our revenues and expenditures that are budgeted for this current fiscal year. And the reported difference there is a positive either $28,000 or $29,000. That's what the auditors have included in the report. That's what we approved last year. To arrive at that, if you take a look at the spreadsheet that we're looking at now, in the annual budget that we approved, net ordinary income was $455,000. If you subtract from that the $426,500, that gets you the $28,000 or $29,000 positive difference that's shown in the audit report. So there's no conflict with the auditors here. There's
Right.
no attempt to change the calendar. It's just that we can't include those set aside numbers and say that we have a positive balance
Right.
with these new projections.
So when we do our budget for next year, as we go into that, should we prepare two budgets, really? One, it says here's going to be what the total income is, but this is less set aside is what we have to work on.
When I did the budget this past year, that lovely document that Steve about killed me over because it was so large, and it's going to get larger this year, sir. But I'm going to answer all your questions ahead of time. We had the full budget, which was 5-point-some million. And then I had two columns, which was operating and what was paid out of grants and set-asides. By doing, if we did the financials based, showing the ones that are in the audit report, those statements, it wouldn't matter because you're doing it by funds. Your street fund, your police, your public safety fund, your general operating fund. And at that point, it doesn't matter where the money comes from because it's coming from a fund. It doesn't care what pocket it's coming out of. The commissioners have chosen to have it done this way. The financials done this way. The switchover is a long process to learn and to understand it. Our outside accountant, Ms. Hauk, was finishing up tax returns for corporate clients today, so she couldn't be here.
Okay.
She's going to try to make the next one to answer any of the accounting more in-depth questions.
Got it. Okay.
I think our projections right now, if we look at the end of the year, I think we're in agreement that we're either at $40,000 or $46,000 in the red, based on everything that we're seeing right now. That doesn't mean that some of these other areas may do better than Sheena's thinking, and we could end up breaking even. But right now, I think based on what we're seeing, we're right around $40,000 to $46,000 in the red.
Right, with the set-asides. Now, here's the thing. Those set-asides, and yes, we have the rainy day fund, and a downturn in the economy is not a rainy day. A natural disaster is a rainy day. But if something happens, we have that money in our bank account that if all Hades broke loose, it can be used.
Got it.
That's why we have the rainy day fund. It is a liquid asset that we have available. So it's not like it's off somewhere invested.
No, I don't have any more questions. I'm good with that.
The rainy day per your balance sheet over here shows about 2.3 million.
Yes. We need
hard
to
range.
have 2.3 million currently,
Good problem.
or we need to have 2.27, we're currently at 2.32. So we're 46,000, our rainy day is flush. Our unassigned, which is the 90-day, is down, but by the end of the year, that will be back up. because things fluctuate in 90 days.
And I think we have about $800,000 in our infrastructure, street fund right now,
Yes, we did.
How much?
about 800,000. We really,
800 Yeah, 814. And
Just
un-
one other,
unassigned funds, yeah, 593,000. Capital improvements, 158. Public safety fund, 223,000. Beach safety, 50,000, and the state 5G funds, 337,000. And the town hall, 2.3 million.
That's not counting the $3 million grant. That's just, because that's
Right.
its own animal.
Right, right.
Can I make another point? One of the reasons, or probably the primary reason for this exercise really, is to respond to one of the recommendations from the auditors. In the audit report, they noted a number of areas in the last fiscal year where the expenditures and the revenues didn't match what we had actually budgeted. And their recommendation was that we make amendments to the budget throughout the year to reflect changes in income and costs. And so that's really at least in my mind, that's the purpose of going through this exercise. I think we do need to make an adjustment. We have higher revenues, but we also have higher expenses. I think a lot of that is driven by the changes that were made in the police department. I think it's about somewhere $250,000, maybe $300,000 in additional expense there, because we've added 3 new officers for the final 6 months of the year. So, the purpose here, again, in my mind, is to come up with some amendments, and it doesn't have to certainly be done now. Doesn't have to be done at the next commissioner meeting necessarily. But I think we do need to make some changes to these budgeted line items so that everyone understands the resources they have available to them and where we expect to end up by the end of the year. And it may be perfectly reasonable for us to wait until we get a much better picture of accommodations taxes.
Right.
And make some sort of an amendment to the budget as opposed to doing something in October. In
makes
fact, I
sense.
don't think we have that on our agenda anyway for October. We probably couldn't do it now anyway.
I was hoping to, if this committee meets in November, December, to have it some strong, the projections more finalized and have recommendations to you based on those projections.
Okay. Sure, we can get together next month.
Yeah, that's fine.
Anything, I know we talked about some of the risks in your projections in here. Anything that you want to highlight beyond that so that we should be aware of?
Not really. I think everything is, besides a natural disaster or something happening, which hopefully don't happen, I think we're looking okay.
I mean, I didn't get a whole lot of time to look for 24 hours over everything here, but I looked at some of the stuff that was catching my attention. The capital expenditure budget sheet, the 1 page.
Yes, sir.
so that's the next agenda item if you want to go to
Oh,
that.
yeah, I'll wait for that then, okay.
I don't mean, Dan, I was just wanting to make sure before we went to this next agenda item, everybody was okay moving on from the first agenda item.
I agree with that. Yeah. So before so you mentioned the police officers and I know that was a variance in the budget. How do we think that's going to come out when you look at the final in the year?
The police salaries are going to be higher, but you also have to consider the fact that over the summer, there was extensive amount of outside sources brought in and extra officers, in-house officers, working many extra shifts to keep the town at a low roar.
So we brought in, compared to last year, we brought in 2 additional officers at night, especially on the weekends, 2 more than we did the year before. That was something that the chief asked for. She talked to me about it. Public safety is our #1 goal. So we decided to do that. So that's why you see we are over where we thought we'd be, especially with the police salaries. Between now and the end of this fiscal year, we don't expect to have any more large salary increases. As Commissioner Persinger said, we do have 3 new police officers. They started the academy last week. That will be a plus, but you've got to remember, by having those three officers, we won't be paying outside sources $65 an hour when we bring them in.
Right, right. we expect some positive, with some savings there.
Right, in the next year, yes.
Yeah, and the seasonal, yeah.
And our seasonal total was below budget because we brought in,
Okay.
unfortunately only hired 11 officers,
Okay.
where we had projected 20.
They were tough to get this year.
Yeah.
And increasingly been harder to get year over year.
Are there any positions that we think are at risk based on, because you said hard to get the officers because of the salaries. Do we have anybody at risk? You know, Paul, I don't know if there are people at risk that we should think about with salaries, or Bill, we should be thinking about.
Well, I think going into next year, we should probably look at, benchmarking us against our neighboring.
So what we try to do is we try to look at all the beach towns between Lewis and Fenwick Island, see where we are on the average. We know we're not going to be at Bethany and Rehoboth or Lewis's level for our employees, but we try to get in that ballpark. Good example, when I got here, our police officers coming out of the academy were at $44,000. We were probably the lowest paid officers between here in Fenwick, with the exception of maybe South Bethany. We are now at 58,000 coming out of the academy. But still you have Rehoboth at around 63, Bethany at 63, and Lewis at 62 coming out of the academy. So we're in the ballpark with those other departments, but we're not at the same pay as those other departments. I believe our officers work a lot harder than those other officers. We handle more complaints in the summer than those other officers. We go to more domestics. We go to more assaults than probably some of those towns combined than what our officers have to put up with here during the summer. So we keep that in mind when we try to look at benefits that we could give. Take-home cards is one of them. Some of our health benefits is another one. We do a little better in some of the other towns. So we try to balance that out as much as we can. But at the end of the day, if we want to hire good quality people that are going to keep us from some of the issues and challenges we've had in the past, we have to increase salaries.
But you think you're okay through the end of this fiscal year? And we'll,
Yes.
and the budget, okay. So I'm good with the first agenda item. Anyone else? Any other questions with regard to the budgets or the actual results? All right. Second agenda item, 5-year capital expenditure budget. Recommended the town council.
This was updated May of this year to do a 5-year. Okay. You will see off to the side, there was some notes that I put in as to.
That's not being projected.
Yep, we're not seeing it here.
Yeah.
She's getting to it.
There it
Okay.
is.
Okay, thank you.
Okay, these were done, the original 24, 25, and 26 were done last year this time. And then in May, I updated to add the following 3 years. We've got vehicles, we've got public safety, we've got buildings, streets, and infrastructure. The primary of, the street projects at the very bottom, that all comes out of the streets and infrastructure account. So we don't have to really think about that as far as our operating. Town hall, that's not an operating thing we have to worry about, because that's being funded. The vehicles, we get 1 grant, but vehicles, if anybody has looked at a vehicle, they're going up. And to get a police vehicle, it's even more, because after the original cost, which even though the chief has been able to get some at a discount, you have the outfitting for it. So that's another $15,000 to $20,000 on top of the cost of the vehicle. So
Lights, radio, all that good stuff.
Yeah, the projections, for the next couple of years are gonna have to be adjusted because of the cost of everything. Now, what I've done is the town manager and I looked at, okay, we may have some emergency repairs to the building. Like we had to go out in town hall this year. Bill was nice and didn't want everybody to suffer. So we had that expense. We prepared for the next couple of years. There was certain things that we budgeted for this year, like a mobile light plant that we didn't get. But that money went towards that along with donations went to the new gator that is going to help the police department.
Yeah, donations from the Civic League, from the Lions Club, and from Dewey Beach Partners, yeah.
Yeah. We looked at, the ATVs for the beach patrol. They're pretty good for the next couple of years. But eventually, they're gonna, salt air is going to, break them down. Even though they're maintained fairly well, we're gonna have to start looking, because some of them are kind of old. The police vehicles, they've high mileage, high wear and tear. Some of them have had to have new engines put into them. Because of, which you never want to have a rebuild engine in an emergency vehicle. So we're budgeting to, over the next 5 years, replace the entire fleet. Now, if the chief can get extra grants or get, anything like that, it helps. But, we have to plan to replace these vehicles, because for so many years we did not plan to replace them. And that's why we're in the situation we're in. We've got 2 maintenance vehicles, but they're a 15 and a 16, so they're not that old. But, we could really use either a dump truck or a dump trailer to help them when there's mulch or, what are those things that they put in the street, Bill?
Yeah, the milling. So,
Millings.
but what we're really talking about here, thanks, Sheena, is we need to come up with a way to fund, as we do with street and infrastructures, capital expenditures, or as sometimes it's shown as capital improvements. So we have capital improvements, and right now we have a certain percentage going into capital improvements for the town hall. But right now, and if I'm wrong, correct me, there is nothing going into capital, what I'll call expenditures, which is what you see in front of you. So I think, Sheena, for what you're seeing for 2024 and 2025, $300,000 was budgeted for those 2 years?
Right, because at the end of fiscal '23, it was decided that $300,000 would be stay in the capital expenditures, this for the vehicles, repairs around town hall, and the rest of it was moved to the town hall account. With the rising cost of things, that $300,000 is not going to last out to
2029.
Yeah, it's just not. There's no way. So we have to we need this committee to help us come up with a way to maybe.
So like we do with infrastructure, a certain percentage comes out of building permits, is
Yes,
it?
sir.
Comes out. So do we want to think about, as a committee, I would ask Dan and the committee members to think about, do we want to take a certain percentage of maybe parking? Or at the end of the year, if we're above a certain, if we make budget, whatever we're above the budget, some of that goes back into capital expenditures? Or does it from accommodations tax? Or from, what was one of the other things, Sheena, that we looked at today?
Licensing.
From licensing. Either a percentage, or once we make budget in those areas, that money above the budget goes into capital expenditures. And it doesn't mean we have to spend it. It just means, like street and infrastructures, it's building up for us. So when we do need to have something done like street and infrastructure, where we have 800,000 right now, we could have money set aside. So we don't have to ask the Lions Club or the Civic League or somebody else if we want to purchase a piece of equipment.
I'm sure we still will, but yeah.
And this is contingent on making budget. So if we don't make budget, we're not moving this
You have to
money
delay
aside.
capital, right. So the total streets and infrastructure, 165,000 for next year.
For this year, we've
For
already
this year, rather.
purchased the zero-turn mower already, and the golf cart was purchased for 9,000 instead of 10.
So street projects, that wouldn't come out of our infrastructure set aside?
That would, but it's still a capital improvement.
Okay.
So the streets and infrastructure account is there, handling that. The town hall account is handling the town hall. And everything else will come out of this, capital improvements, expenditures.
What about the public safety fund? Does that do anything with, again, I want grants and I want something else first, but does the public safety fund, would that do police cars if needed?
No, because most of that has been grants that is being spent as we speak, and it's going down. So right now, the money's in there, but as the grants get spent, it'll be going down.
One of the biggest questions I had on this, I guess, was just reality when I looked at this. I see total streets and infrastructure, let's say that's an easy one there at the bottom, 165, 150, 150, 150, 150, 150. We know if we're gonna do something, cost of living, even if we did something, say 10% across the board, if you're gonna be paving, that's gonna be petroleum products. If you're gonna be putting up wooden barricades with signs on them, wooden posts and plastic encased, there's petroleum involved, wood involved. We all know what the COVID price did to jacking the price with. I think that starting after the 2026, everything looks normal. Like even the police department says $70,000 for vehicles, but we have 0 in the column for the radios, like we have 30,000 for this year. You know you're going to be replacing 2 vehicles here with $70,000, so you should put something.
So unless I'm wrong with like the radios, these are portable radios that we purchased. They were part of the car outfit.
Yeah.
So we just replaced, I think 15 or 20 through a grant in other ways, the portable radios. So everybody has an 800 megahertz radio now.
Okay, so I was wrong on that one, thinking that went to the cars, but just basically going, we know gas costs $2 one year, $2.25 another, $2.30 another. So the 150, 150, 150, 150 is unrealistic.
Correct.
So we need to come up with, even if it's something as simplistic as 10% each year, at least it's a realistic projection as opposed to just fill the nap and move it on and it's, some of these are very realistic and some are we just kind of bottom out.
Because the reason that is that way is we just completed quite a few streets projects. And I think we were hoping that we were close to getting to a point where we weren't gonna have to do any for a while.
So when we say that, the storm drains, we've done the north end, they're completed. We will be doing the south end, but not as many need to be replaced, so our costs won't be as high there. The big thing we're looking at right now is the Reed Street with the continuing flooding that we have there to address that. That is going to be a chunk of money out of street and infrastructure. It's probably about $150,000 if that's what Infrastructure Committee recommends to the commissioners. Once we finish that, there are some other smaller projects around town that we'll want to do. The state is coming in, is going to repave all the state roads in the town this spring. The only roads that won't be repaved are Chesapeake, Carolina, and part of Jersey, because the town owns those. Those, we will try to work with the state to see why their contractors here, if we can pay them, it'll be less if why they're here to do it. But I don't see any other big street and infrastructure projects at this time. Now, of course, the town hall is going to be a huge project for us. And right now, we do have some money going from the hotel tax into that capital improvement fund.
I think my thing is just a flat, straight line number as opposed to a graduated, a known figure of cost of living going up and price of material going up, cost of labor going up for the last 3 years, fiscal years 27, 28, 29, just to make it more realistic as opposed to, we looked at it, we're doing good with the budget for the town hall. We got the $1, $2, and $3 million, and then we just taper off to 5,000 again for emergency stuff. So just make it, somehow we come up with a realistic graph of a futuristic prediction.
Yeah, I think we're hoping for like the emergency repairs on the town hall. We're still going to be in the town hall that we're in now. And usually one of the units goes, since I've been here, we've had to replace 3 of the air conditioning units between the town hall and our building in West Rehoboth. We are hoping by 2026 or maybe 2027, we have a new building, and hopefully we have new things in the building. But to operate that building, we've talked about this before, commissioners meetings, to operate this new town hall, once it's built, this new police station, it's gonna cost a lot more to operate this new building than it does right now. So that should all be taken into consideration.
Electric bill goes up.
Everything's gonna go up, just in this building. All the things that have to be certified all the time and maintenance has to be coming in check, all that's gonna go up as we go through the next 5 years.
So aside from street projects, that seems to be the most amount of money out of this. You know, like if I look at 2029.
But that's coming out of the streets and infrastructure account.
Right. So how much do you think we need capital expenditure wise? And then we can figure that out as a percentage of
Basically,
total revenue. We can
roughly
figure out which bucket.
100,000, if we could infuse about 100,000 a year, I think it would keep the ball rolling until town hall is built and the money can come back from the hotel tax
Right.
into capital expenditures.
So how about like accommodations tax? What would the percentage be that we could set aside? We don't take anything out of that, right?
We don't. My feeling on that is accommodations tax is, while all of our income streams are contingent on others, that along with hotel tax are some of the most contingent.
Right.
Because if people don't come visit, there's no revenue. I think, my feeling is the parking and the business licensing are the most stable because you're always gonna have businesses coming into town.
What was it, parking and what else?
Licensing, which is
Licensing.
your commercial and your rental licensing.
Those are the two areas, when Sheena and I sat down and looked at this, we felt that those were the two areas where we feel every year there's gonna be some extra revenue there possibly, that a percentage of that extra revenue or that once you meet the budget would go into capital expenditures. And if it meets the $100,000 or whatever you decide or recommend to the commissioners, then it would go, maybe it would roll into, for the town hall, for the new town hall. But we gotta have some funds going into
Right, we gotta pull
our
it out of
equipment.
some revenue stream.
Right.
But all the other revenue streams have something coming out of them.
Building permits does, transfer tax does, parking actually does.
We're already taking money out of
We
parking.
take 5% of your seasonal and your permits, not your meters, which
We don't want meters.
don't understand that. But anyway, out of those two, goes to your streets and infrastructure.
Oh, there you go. So which, how do we make up, is that another 5%? It's 1.5 million and we need
I wouldn't
100,000,
say,
3%.
my feeling is you don't touch it unless it hits budget. And any excess, then you use that.
So if we don't hit budget, then no money goes into capital.
Correct. And then the next year, we just have to, maybe we don't get 2 cars, maybe we only get 1. But that way you're not punishing, you're not hindering your current activity. You are properly or better using the benefits that you have received.
So Sheena, you're saying basically keep things with regard to the fees and the taxes where they are. And the recommendation would be anything above budget would then be allocated to the capital improvements, capital expenditures.
On the business licensing fees, business and rental licensing fees, and your parking revenue, the total for those, the total licensing. If
Oh,
that-
so you're saying the variance on the revenues.
Yes,
Okay, so what happens if our expenses come in over budget? You're ahead by whatever, pick a number, $100,000 on those categories, but your expenses come in $200,000 over, so you're to the negative 100. Would you still set aside?
it's a very good question.
We do it now.
Yeah, we do. We take the set asides
Sides.
automatically, whether we've made budget or not. That is something that could be looked at, but you really need to, that goes down to department heads maintaining control over their expenditures, which is improved a lot, even though this year it doesn't look like it has improved a lot.
I don't know, what's the committee think? John, what are your thoughts?
I'm just taking a look at this, and I do agree that we need to have a percentage increase for the cost of living. The first thing I saw with this page was that you just can't repeat 150,000 right out. So I see some issues with this. I think the method for finding the capital expenditures, there is a concern that if we are running a deficit in an area, that we're still funding the capital expenditures with that, even with that deficit. I'm deferring a little bit on this one. I'm not on, I'm trying to get to know the town as well as I can, as quickly as I can. So those are the two things that popped to me that I've listened to that I have some concern about.
There's also the option of just saying, okay, at the end of the year, we're in the black. We fund it right then. And that takes into consideration if expenses go higher in one of the areas. These are just all ideas.
Well, I was gonna say with the streets and infrastructure, that READ project is the biggest thing right now on the docket, correct?
We have three areas in the south end of town that we will need the drains realigned. Once that's done, the Reed Street project is our big project after that.
Yeah. So I guess whatever the estimate is for that kind of dictates, the projected fees, at least for the immediate, like 2024, 2025 projected fees for streets and infrastructure.
I feel the $800,000 that we have in there right now will cover. We'll cover all the things that we want to do between the relining in the south end and with the Reed Street project, and still have money left over.
And that is increasing every month, as you can see by the one spreadsheet. It goes up more than it goes down every month.
It's definitely needed. I mean, it floods back there pretty bad too.
No, I think it's wise to, got to be setting aside the money for it instead of wait till the problem will arise and then saying, oh, what are we going to pay for?
Yeah.
Absolutely.
Right. All right. Dan,
Sheena, you mentioned seeing, like, at the end of the year, to the extent that we're in the black and funding capital expenditures accordingly, instead of tagging certain revenue lines to serve as the funders of the capital expenditures, even if they're in a deficit. I must say I feel more comfortable with that. I think hopefully we're gonna be in the black more years than not, at which point we can also dedicate a percentage to capital expenditure budgets. It needs to be there for all the concerns we have on this page.
And just so I can understand, so let me just pick on a number. Let's just say that we make $400,000 income this year. And the set asides as required between transfer taxes and parking and permits and all the good stuff is $400,000. That 400,000 is put aside into a separate bank account. And there's no excess funds to go into this capital improvements that we're talking about. Right?
Throughout the year, every month, money from building season, during the summer, parking and transfer tax goes into the streets and infrastructure account based on the percentages.
But it is possible, because they're based on revenue, that our net income, I'll pick a number, this example is 300,000, and our set-asides are required to be 400,000. Where's that 100,000 coming from?
That is coming out of our unassigned fund. It's the rest of the funds just sit in our main bank account, and they get,
So deficits come from unassigned.
yes,
Got it. Okay.
just
That
as
is-
income would go into unassigned.
Right. So we have 593,000 in unassigned. And that it's just a variable depending upon where we come out.
Correct. It goes up and down each month based
Right.
on the usages of the funds, expenses and revenues that come in.
Got it. So if we were to set aside on the revenue lines, positive variances to capital improvements, at the end of the day, your net income is below your set asides, you would just pull that out of the unassigned fund.
What my thing is whatever we have in our, revenues that come in minus the expenses, and that total, subtract out whatever set asides have already been done or still need to be done to bring the rainy day up to where it's supposed to be, and then that difference, that is, if it's positive, that difference goes to capital expenditures or wherever the commissioners and y'all say.
With that math, I mean, that sounds right to me. And I would be in favor of that math. You're basically saying any excess cash, after we go ahead and pay the obligation for the unassigned would then move into capital.
Correct.
I can support that.
Yeah, I
don't know if
I feel more comfortable about that myself.
Dominic or Zeke, how do you?
I'm in agreement, that's fine.
I'm liking what I'm hearing, so I got no problem. I got nothing to add.
Okay. So Paul, help me here. Do I need a motion that we would send this to the commissioners?
That would be appropriate at this point.
Okay,
So
so.
how do we have it listed? Well, develop a 5-year capital budget to recommend to council. We don't have discuss and vote. Kate? We could vote on it. That's broad enough.
You're recommending it to town council, so I would say go ahead and vote.
Okay, yep, you can vote on it then. It's been discussed.
Okay, do we need to open it up to any, if there anyone participating?
So specifically, what's the motion to send to the commissioners?
I believe, and Sheena, make sure I'm going to say this correct.
Yeah, I was gonna say, Dan said it right.
To the extent that the annual income exceeds required set asides and the unassigned fund is at its obligation, any excess dollars would go into the capital expenditure account.
Correct.
Excellent.
Yep.
Okay, so that's what it is. Do I have a
So that's the
motion?
motion. There needs to be a second.
I'll second it.
Any discussion?
Now,
Yeah,
just to clarify, the very last part said all extra money will go to the capital expenditures or a certain portion? I just want to make sure I heard the last part right.
I did say the word all. But we can modify that if we want that to say at the discretion of the town manager.
I think I would be more comfortable with that just because they would know better day to day, week to week, month to month, exactly
Okay.
what you need as opposed to a blanket statement of all.
Okay,
So you,
so amend to say at the discretion of the town manager. Do I have a second on that?
second,
All in favor?
aye.
Pass unanimous, 3-0. He's allowed to, Dan's allowed to motion, right? As chair?
I think so.
No?
No.
All right, let's go back then. We got to hold, somebody else is going to have to motion it. using.
All right,
Dan's
Dominic,
language.
you want to start off here as the new kid today?
I'll motion the,
Welcome, Dominic.
yeah.
John, why don't you second?
I
If you're
second.
so- If you're so inclined.
Yeah.
Okay, all in
And that
favor?
one would include the language in the discretion of the town manager.
Correct.
I
All in
second.
favor, say aye.
Dominic motioned.
I motion.
Who's the second?
I'll let,
I second.
there you go.
Okay, all in favor, say aye. All in favor, say aye.
I
Aye.
All right.
Okay, there you go.
Now we did it clean.
All right, the third topic here, review town fees to provide recommendations to the town council regarding the fee structure. Bill, are you taking that on, or is that Sheena?
So what we've looked at is currently what's proposed. Thanks,
No,
Sheena.
the agenda. Go to the agenda.
What's currently proposed is that when we do our budget every year, that we also review our fee structure, which is in front of you here, which is, I know it's hard to read, but Kate can bring it up. And if we want to make any changes to that fee structure, we make it as part of the budget. So when you vote for the budget every year, you're voting for any changes in the fee structure at the same time. Instead of throughout the year, you may want to try to change one in August, and you may want to try to change another one in October or in January or in March. Some of the other surrounding towns, what they do is they review this like they review their budget, and if they want to make any changes, they put it on the agenda, they make the changes, and then when it goes to budget, it's all voted on at one time. Does that make sense?
Yeah, I didn't get to print that one out. I gotta take a peek at it.
It's tough to read. She's got
Yeah.
She's got it up, it looks
Yeah,
pretty
it's
good.
gonna be even harder. Okay. I saw that one at home last night, so okay.
So, Bill, what are you looking for here?
So here's, can I jump in?
Yeah.
Just my thoughts. There's 64 items here. I don't, and Gary, maybe you're with me on this or not. I personally don't want to vote on 64 fees every year. I think if some are changing, if they change within a certain percentage, hey, if you raise them more than 20%, then, that needs to go to the commissioners for approval. Pick a number. I'm just drawing 20% out of my head. So that's just my thought. I don't think we need to vote on 64 items every year. But yeah, you just approve them all in a lump as long as nothing went up line item wise more than 20. If that's the case, then. I don't know, I'm just throwing it out there. That's for discussion, but.
Yeah, I don't know if it's appropriate for me to comment right now. I think you need to hear from the committee members about what their thoughts are, and then
Yeah,
we can discuss this among the town council.
Yeah.
Yeah, well, I agree with the concept. I don't want to look at 64 individual line items and discuss and have the committee vote on that. So conceptually, I like the idea of doing this in lump sum, except for any increases above a certain percentage.
and you guys can discuss what you think's a appropriate one and make that recommendation. And then at the commissioner meeting, we can, Gary and I can't speak on it, like what we think the right number is. I just threw a number out there, so don't hold me to it.
Having been a commissioner in an 8-hour meeting, I think you need to experience that.
I remember watching this.
No, I think that's a perfectly logical principle to try and do it based on a percentage. Everything should stay within that. You don't need to do 60 plus items. And I think that'll help you all out, Sheena, Bill.
And just to that end, do we think there is going to be any extraordinary increases? I think maybe the beach tax may be the only one that may be subject to something that that has a significant increase. I won't put a number on it.
I don't think you're going to see from the town an increase on the beach tax. We can't do that. There'd have to be a referendum on increasing the beach tax. The people of the town would have to do that.
Okay, my mistake. I was thinking about the dollars we receive would be improved because of the rebasing of the tax year. I don't know. where that is, but so Bill, where are you? What would you be comfortable with in terms of a number, a percentage?
I would say anywhere between 20 and 30%.
Of an increase?
Yeah.
Any other members of the committee thoughts?
Maybe there'd be like a special rule if it's being increased each year by, right under if it's being, increased on like 3 years in a row, then you'd still have to look at it again, despite the percentage. But, offhand, if it's just one time around 20%, that's fine. Given, unless it's multiple years being increased, just right at that level, then look at it.
And so you're saying,
Percentage that's being increased. Yeah.
so you're saying that, let's pick a number, 20%. If 20% is in a year, but if it's in subsequent years, it's an addition, it's 20% again. Then
Yeah,
that would
let's
be
say that it was like, our deadline is 20%. Then if it's being increased 19% 3 years in a row, then we'd be forced to look at it, even despite that it's underneath the 20%.
maybe, yeah, say it as an aggregate increase over 3 years or something.
Yeah.
Okay. John, thoughts?
Yeah, I kind of mentioned earlier today offline, the concern about the number of fees, and there was a fee that some of our income, I was concerned about. We were seeking fees or in some cases, administrative fees or what was it, parking, beyond, what other towns, Rehoboth in particular are expecting. And my concern was that we didn't want to be cast as the town of fees. Typically, I mean, we're looked to, one thing that we like being is the casual town where dogs are allowed on the beach all the time. I mean, our reputation is such that we are able to differentiate ourselves from Rehoboth as being a little bit more casual, a little bit more friendly. My one concern is if we're outdoing our fees compared to them, something we just need to be thinking about. And I realize that fees are often an alternative way to tax, and I think we have to be careful about that. As we start looking at increasing fees, I ultimately, is that just a different way of taxation? These are kind of more policy concerns. I don't really have much to say about, each, all the different dog fees or licensing fees. So just things that I think we ought to be careful with.
I mean, all the fees that we have, our surrounding town has. The one fee that we don't have that surrounding towns have is a property tax, a home property tax that goes to the town. But all these fees you see in front of here, with the exception of maybe the dog licenses, because the other towns don't allow them, even though Bethany is now moving towards a dog license for dogs in their towns. All these fees are also in the surrounding towns. So we're really not that much different when it comes to these fees, but we don't have a town tax. So we really rely on parking, accommodations, transfer tax, and we were hoping hotel tax, but this year it's may not be there. So.
By the way, on the related to the hotel or accommodations tax, there was an issue earlier. I don't know where it stands. I haven't really heard much about it, but there was the thought about adding 5% to it. So that, for example, if you're renting a house if you're renting your house and you're already paying a 3% rental fee or tax, that it might be pushed up to 8. What is the situation there?
Yeah, that's a state, but I'll let Commissioner Bauer
Yeah,
address
that's a
it.
state, it didn't pass the last session up in Dover.
Okay,
So what
good.
it would be is not to say it won't pass again in January, but it didn't pass going into this year. So it was if they would have passed it last session, it would have started this January. If they pass it next session, it'll go to the following January. There's some resistance on it because it purely attacks our area more so than the rest of the state. And it's money that they would tax people, because we have more short-term rent. This is on short-term rentals, not on hotel taxes. This is somebody
Right.
your house. So your Airbnb is a
Actually,
town.
100%, it'd be the 3% plus 8% on top of it.
Right. We get 3% and we'll have 3% no matter what. The way the bill's written now, it would add another 8% to that on top of our 3. And the state would get all 8 of that. And the logic was, like, we charge a hotel 3% accommodations tax and we charge somebody rents their house 3%. But if you checked into a hotel, you paid 11% because they put 8 in there, which was 5 to the state, 1% to Chamber of Commerce, 1% to beach replenishment, and 1% for state tourism.
Yeah,
Yeah.
state tourism.
So that's where that 8%, but if you rented your house, you didn't have to pay that 8%. And it's one of 3 states left in the country that doesn't do it that way.
Wow. That interests me because I tell you, that has quite a draconian impact on folks that choose to rent their house for 2 months of a year.
Right.
But the important thing is the town will get 0 out of it.
Yeah, whatever the
That's
state
correct.
passes, we get none of that.
Right. Right.
That's
Where
why
would
we
it
just
go to
treat it as
Sussex?
tourism.
Would it go to Sussex County?
Goes to, well, 5% would go to the state,
Divided between 3 counties.
divided by 3 counties, and then the 1, and 1, which was state, beach replenishment, Chamber of Commerce and tourism. I guess you could say that goes towards the Sussex County.
And
But-
then,
So the issue with it though is, does it matter if you rented a hotel room or if somebody's 1-bedroom condo? Should there be different tax rates for both? You can argue
Right.
that both ways, right? So if I go over to the Hyatt, they have a condo here, and this is the tax rate on that condo, but if I rent your unit that you own there, I only have to pay you 3.
Mhm.
So it is, in some ways equal. I know it's a tough pill for everybody to swallow, and everybody's going to resist it. But good news is Rehoboth, we have 3%. Rehoboth is already at 6. Bethany's at 7. So now you're going to go 7 plus the 8. So if you rent a Airbnb down in Bethany, you're going to be at 15%.
right.
So,
And after, there's only so much you can charge for the rentals.
great.
If on top of that, they're going to be paying, fees of up to 15%. Wow. I mean, that could come back to bite, us and the other beach towns if that happens. In terms of, rental income or fees that we get off of rental income.
That's true.
But we have no control over that, right? That's the state.
All state.
Right.
So back to the fees that we have here, I guess for the town manager recommending that I guess, and the commissioners have some latitude to do a lump increase. Excuse me, rather than us looking at individual fees, that if no individual fee increase exceeded 20%, to take Dominic's aggregate, 57%, I just did that below the 20% over 3 years. That would be at the discretion of the town manager, subject to the approval of the commissioners, of course. I think is that correct, what we're talking about?
Yeah, that sounds good to me.
Makes sense.
Okay, now, is that something again?
I'm just thinking, the 57% thinking that they could do 19, 19, 19 or whatever. Perhaps it would be that, subject to the fact that fees would not be increased in in consecutive years or something like that. So there's the authority to increase, fees up to 20%. But, not, instead of worrying about a 19, 19, 19, why don't you just say, and hopefully the choice of how much to increase it by would be looking ahead anyway. Why don't we just say that, the discretion of the town manager to increase by 20%, but not in consecutive years.
So that he not by 19, say it again, but by 20%, but not consecutive years. So he could do 20, he could do
Well,
19.
I think Dominic was concerned about coming under the 20%, like instead basically charging 19, 19, 19. If the concern is that, this would be a way of evading, I don't know, the fee increase system, it's better to just basically say that a 20% increase is discretionary and authorized, but not in consecutive years.
Yeah, and at the end of the day, it's just an attempt to regulate,
Yeah.
overfeeing, I guess.
Right.
Yeah, I mean, and fees and taxes are two different things. Fees are attached to a public service that you provided. Sometimes those costs go up. They typically don't go up more than 20%.
Right.
Inflation went up, 9% last year or something, 8%, whatever number you want to use there. But so, yeah, I mean, they could go up consecutive years, but that's abnormal. That's not normal stuff. Look, yeah, I think, my personal opinion, as long as it's a reasonable fee, like if I charge 10 cents for a copy for the page and I went to 12 cents, I don't think that's not a substantial change.
No.
Right.
And if I raise it the following year to 14 cents, like, now you're getting crazy here. But I mean, we do itemize everything, every possible fee that we have. We could probably lump a whole lot of them in the same buckets.
Yeah.
We wanted to simplify it even further, but I'd just like to do it the simplest way, with the least amount of administrative, time consumed to do it.
I would be okay just allowing the town manager to increase fees up to, not exceeding 20% on any fiscal year. Are people okay with that, or do you want?
That's fine.
Yeah, no, I'm not going to push the button. It's fine.
I'm good.
So somebody has to push that, aside from Dan.
No, well, let me restate it just to make sure that they know what they're going to make a motion on, which is that we would recommend to the commissioners that the town manager had authority to increase fees and license, yeah, but up to 20%.
Before commissioner intervention.
Yeah, for each fiscal year.
That's per line item, correct?
Yes, good point. Well, if you guys like that, then we need a motion.
I like exactly what you said. It sounded like I said it in your voice.
So moved.
We have a second? Is that a second?
Mr. Dan?
Yeah, I'm sorry, it was blanket out. So we got a second, right?
Yes.
Okay, so all in favor, say aye.
Aye.
All right, it's unanimous. Yeah, a little echo there, I couldn't hear it. Anything else? Committee member comments, anything else on, any other comments?
Do we have anyone, any non-commissioner attending or member attending who has a concern? I don't know.
Nobody on the waiting room?
Kate, no one out there? Okay.
Anybody watching online?
I'm looking for my profile, Mr. DeMille.
They want to see
Publicly and no
the,
one's watching.
well, since no one's watching and no one really is out there, do I have a?
Doesn't mean that people don't care.
No, I know. And it doesn't mean that they're not going to look later on. I watch the commissioners' meetings and afterwards.
I don't know, like the Budget and Finance Committee or like the new Rolling Stones album, it's pretty close.
Do I have a motion to adjourn?
I'll make a motion to adjourn.
Do I have a second?
Second.
All in favor, say aye.
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 All right.
Hey, thank you, everybody.
Yep.
Thank you, ladies and gentlemen.
Thank you.
Sheena, thank you. As always, good work.